Welcome back to another episode of Letters of Intent. I am your co-host, Pankaj Raval, and I'm joined today by my co-host, and we have got a special returning guest today as well, but I don't want to spoil the secret yet. So Sahil, tell us a little bit more about what we're going to be talking about today and who's returning to the show.
That's right, Pankaj. All right, so for our audience, you are joined by me, Sahil Chaudry, corporate attorney here at Carbon Law Group, and we have a special guest today, Dilveer Vahali, my longtime childhood friend, also known as Captain Vahali. DV, welcome.
Thank you. Great to be back.
So for all of our listeners who don't know, DV is a multi-hyphenate. He started off in traditional finance at Kirkland, and today he's on the cutting edge of crypto at CoinFund. He's a pilot, a sailor, a wine entrepreneur. DV, I've known you as a person who lives life on the edge, so it does make sense that you would be drawn to an emerging technology like crypto. But in your words, what draws you to this world of cryptocurrency?
Sahil, you've always, like we were talking about, been a great hype man, and always great to kind of see some of the things I'm doing through your eyes, because it doesn't feel that exciting on a day-to-day basis, but you're right, it is. So what drew me to crypto? It's a lot more boring than it sounds, but I guess sometimes you have these things innately in you. I've always loved technology, like since a young age. I was doing the puzzle computers on my own. Like I'm always the annoying guy who has like Alexa connected to everything in our house. And so I think like it's that same kind of love of tech. When it's like mixed with finance, it's a very, I think, easy segue into crypto. The actual story was after leaving Kirkland, I went to the Chernin Group, which was a growth equity fund, and they were kind of in the consumer space. The Chernin Group decided to raise a crypto fund, right, to invest in startups that were essentially doing consumer things on blockchain. And so we were looking at like NFT startups and digital art galleries and stuff like that. And going from this like very traditional Kirkland doing LBOs, it was kind of a very interesting path. But what I liked about it is that it really felt like a maturing industry that needed professionals and seasoned professionals to kind of bring that traditional finance into this. And attorneys are, as you guys know, are usually very risk averse. And so the folks who were kind of, I guess, trickling in here kind of had this sense of adventure, right? And of like taming this new industry. And I really liked that. I thought there was like these new rules we were creating. You're literally creating new markets. You're figuring things out on the fly. It was a little different than traditional finance where these things have been in play for decades, right? And while you make impacts on the edges, crypto to me seemed like a place, especially as a deal attorney, where you could really make big deals up front and really precedent-setting deals. And so I really liked that opportunity. I think in crypto, we really make the market for how you do things.
So why do you think that a company like Chernin, which is in traditional media, was interested in diving into something like crypto?
I think TCG is really good at picking consumer type businesses, right? So I think crypto in 2021 was all the rage. And there was a lot of interest back then in creating consumer businesses and brands on blockchain rails. There was things like buying property in the metaverse, which you had literal real estate brokers who would broker property sales in like these virtual worlds and things like that. And these were getting really big following. And it was almost like a perfect fit for TCG because they really understood like branding, consumer type businesses. So I think that's why it was a very logical step for them to make that move. When I think things hit the fan in crypto, consumer also was the first to go, right? And that's what I like about my current position at CoinFund is like we are much broader in crypto and blockchain, like looking at everything from consumer to also fundamentals, infrastructure type companies. So like anything that has a nexus to crypto and blockchain. But my first taste and the reason I got into it was at TCG and TCG's foray into crypto. And that's how I started thinking about this whole world.
So, DV, I want to jump into like deal making a little bit, but before I do that, I'm actually just personally fascinated by the crypto world and like kind of the rise and fall and perhaps ebbs and flows of this world. Because like you said, you couldn't go anywhere without hearing about NFTs. and
Yeah.
and Bitcoin in 2001 or
Yeah.
2002, you couldn't go anywhere
Yeah.
really in 2020 anyways. I
Yeah.
mean,
I was going
online.
to say 20. I think you meant 2021, not
Yeah.
2001. 2001. If you're investing in Bitcoin in
Oh, yeah.
2001, you're like,
You wouldn't be talking to us.
Yeah,
exactly.
Yeah.
I'd have my own island right now.
Yeah, exactly.
But no, in 2021 there
Yeah.
was all the rage. Everyone was talking about it. Gary Vee was known for
Yeah.
promoting whatever he feels like, but
Yeah.
like with the loudest voice, NFTs. But like now it's not AI is kind of replaced as the hot term today. But I'm wondering, do you still see that market growing, or do you see it's going to be leveling out? Like, what do you think the future looks like for Bitcoin, blockchain, crypto?
Yeah. So as somebody in the industry, my answer is 100%. I see it going to the moon,
Yeah.
not promoting any single company or anything like that here, right? And this is not financial advice, I should say up front.
Yeah.
Financial or legal advice.
And this is
right?
not legal advice, right?
Yeah, this is not financial or legal
This
advice.
isn't any kind of advice.
This is
Why are you even
entertainment.
listening?
This is entertainment. Take it for what you will.
There's no education. This is just entertainment.
I sometimes, and this is a personal thing, have an issue with like the word crypto, because nowadays when you say crypto, people think of like gambling, right? They think of like these currencies and meme coins. And what I think of this industry, I think of a very powerful technology, and that's blockchain, right? And I think what will happen is that blockchain will underlie a lot of different things in our lives. And I'll give you a few examples of those. And it'll just make things easier. And folks will be like, this is cool. Like this got simpler, but they won't necessarily understand that it's on crypto or blockchain rails. We can get deeper into other examples, but like one of my favorite, for example, is real estate, right? Imagine if you were able to buy and sell real estate or your own home with a few clicks, right? Like right now, if I think about the process, I think of, I want to sell my house. I then list it with a real estate broker, then find a buyer for the house. And then we sign a purchase agreement. And then I have an escrow company and then a title company for them kind of telling us the chain of title is correct and ensuring that whole process. And then when we come to closing, I say all the conditions are met, and escrow company is physically taking the cash, it's paying out the bank. And then we're going to like the city with microfiche film and getting a title. And then it's very manual, right? Let's stay 50 years in the future, hopefully sooner than that. Let's say that our home titles exist on blockchain, which is this immutable ledger that's spread throughout hundreds of different computers worldwide. So now we have a verified chain of title digitally, right? And let's say I want to sell my home to Sahil for $10, right? We come up with the pricing. Sure, that is still probably pretty traditional. But instead of signing a paper contract and then like your broker saying, you didn't sign this part or this part, it's all digital. It's a smart contract. And then Sahil comes in, he has an inspection requirement, he has loan contingencies. But when he checks all those boxes, this smart contract itself, it's just computer programming, is taking the capital from Sahil's wallet and taking the title from wallet, right? And it's just exchanging them. And what's kind of amazing about it, right, is you cut out all those middlemen, you cut out your title insurance and your escrow, the transaction costs are less, the timing is quicker. And look, I understand there are probably real estate professionals who are like, well, there's this, and this, and there's things that you're missing. And I get that. But at the end of the day, you can understand how this type of technology can really be beneficial in making things quicker and more accurate and cheaper to do. And so those are the types of things that I love, these kind of real world examples, because I think when we talk about crypto, we talk about Bitcoin and Ethereum and meme coins and things like that, which is also a huge part of it. But these real use cases, I think, are great.
Yeah, absolutely.
Yeah.
So, DV, that's really fascinating, and I appreciate you kind of explaining that to us, because, I think it's a complex world.
Yeah.
I tried reading a white paper on Bitcoin once, and I think I fell asleep halfway through. So it is not my claim to fame, but I want to understand this, and it is a fascinating area. And now I want to shift a little bit to, I think, financing. We work with a lot of startups, and you've worked with startups, you work in startups in the startup world. But I know, like, we hear a lot about VC firms and startups raising money through VC, but cryptos, I think, approach it a little bit different way. Can you tell us a little bit more about how cryptos approach finance and raising money versus a traditional SaaS startup?
Yeah, so I think there's a lot of overlap, right? But deal making, I think, in crypto is about people as much as it's about the document. So when I'm sitting across from a founder in crypto, they're not thinking totally in terms of securities laws or LP returns. they're building something that can actually run without them on blockchain. So a lot of my work is almost like translation work, trying to bridge this gap between this DeFi kind of ethos and the discipline that comes with institutional capital without kind of sacrificing us being founder friendly. So what that kind of means, right, is in traditional finance, we all kind of know the game, right? It's you have pure equity, you have like, do I want a board seat? What's the option pool like? And there's certain checklists. To that in crypto, this whole thing of tokens, right? And what are tokens? And is that a way for the company to gain additional revenue? Do I need a piece of that? As an attorney, I'm thinking, where else can revenue accrue to? Where can profits come out? And tokens have kind of gone in and out of vogue, to be honest. In the beginning, I think every company wanted a token and sometimes not for a realistic reason. And I think the way that we view it now is that we absolutely understand that tokens are a novel financial instrument, but we definitely want some critical thinking around why a founder or why a company needs a token before they launch one. So we might ask for things in our deals, which you wouldn't have in traditional finance, like, hey, we want a veto right over your ability to launch a token, right? Because we want to make sure there's reasoning for it. We want to make sure it's done right. We want to make sure that securities laws are being followed because this is an evolving technology and we want to make sure investors are still covered. So things like that would be very different, right? And then the biggest part of it is, do we just want tokens? Do we just want equity? That's going to be the biggest difference, I think, between traditional finance deals. Most often where we end up is we have an equity deal with a token side letter, token warrant saying, if you ever launch a token, we get part of that, right? And that's kind of where we usually end up. We look at like that torrent token structure as sometimes it can be a path to earlier liquidity, right? Because there are these liquid instruments that are trading, because there's a lot of interesting things that folks are doing with tokens and there's a need for them as well.
Yeah, it's interesting. I would love to ask your opinion on this real world situation where the Hawk 2 coin, that woman that became famous and then she issued a coin. I don't know if you're familiar with it, but I know she got into some trouble. Yeah. If you were advising her, what would you have said to her early on with this?
Yeah, I mean, those are examples of like meme coins, right? There's nothing kind of backing them. It's more like a collectible. And so I don't know the details of why she got in trouble. It probably had to do with the way that they were promoting it and things like that.
I believe so, yeah.
There are steps you can take, even if you're issuing a meme coin, of like making sure you do the promotions correctly, the way that you issue it is correct. Basically, there was, frankly, like this detente, I think, in the industry of like, hey, if you do it this way, this is going to be like the gold standard. We still don't know what's going to happen, but that is changing now, I think, with the current laws that are coming into place.
So it does feel like we're in the Wild West right now. The regulatory landscape is not black and white. You're in a gray area. And at the same time, if we look at, let's say, American history, that's when fortunes are made, is when there is some kind of gray areas. How do you think about being M&A attorneys working in traditional finance, we are familiar with an equity stack. We're familiar with options, equities. We're familiar with what looks like a security and what isn't a security. And in this case, you're talking about, I guess, a new technology, a new infrastructure. But when we're talking about crypto, we're talking about, for example, tokens. What is the regulatory landscape right now? What is regulated by the SEC? What is outside of those current regulations? How do you think about that as an attorney, since you're the one who's navigating the risk?
Yeah. It's a great question, right? And I think it's one that we constantly evolves, right? Which is different than traditional finance, where you have court opinions, you have very clear laws, you have SEC guidance. This is constantly evolving. I think we're in a different regulatory environment today than we were even 2 or 3 years ago. You have a much friendlier CFTC and SEC. The current head of the CFTC was somebody we even used to work with at a law firm, right? Like, it's folks that know the industry a lot better. We have always, the attorneys in the industry, I'm pretty sure I speak for everyone when I say we've never thought that we don't need any regulation. The issue was that we were being forced into this securities laws box, right? Which would have severely curtailed, I think, a lot of the benefits that crypto could bring. So now you see that changing, right? I think earlier last year, you had the Genius Act passed. The Genius Act was called the Guiding and Establishing National Innovation for U.S. Stablecoins. So U.S. stablecoins you can think of as like digital dollars, right? And we started getting some clarity around using stablecoins, right? And then recently you have the CFTC and SEC issuing a guidance on tokens, right? Where they've created 5 token categories, 3 of them that they lay out, like meme coins, for example, they say are not securities, right? Specifically. One of the categories around stable coins, they say it's fact specific. And then the last category around kind of like digitized versions of stocks will always be a security. So this is the first time we're getting clarity kind of like that from the SEC. There's still, I think, questions that remain around the interpretation and the framework, which we think will be resolved by further rulemaking and litigation and things like that. But it removes a lot of meaningful uncertainty for those of us in the ecosystem. And then we are really looking forward to legislation that's currently kind of working its way through, which is called the Clarity Act, which will add to these designations and give even further foundation to some of the token concepts.
So you've mentioned stable coins. What are
Yeah.
stable coins and what's the difference between stable coins and the other coins?
So stable coins generally are backed by actual, what we call like fiat currency. So you have 100 million US dollars, then you have 100 million US DT or USDC, our famous ones, right? And what it's saying is like, look, we have an actual treasury of this stuff. These stable coins or like digital dollars are actually backed by dollars that we're holding, right? So it's not something that should really fluctuate. It's usually pegged to a fiat currency. And it's becoming a great way to transact because the rails that stablecoins use are cheaper to send people money and they're quicker, especially doing like international deals and things like that.
I know we were having a conversation about Tether and Circle. And I mean,
Yeah.
these are companies now that have huge market caps.
Yeah.
Circle is now a publicly traded company that is issuing a stable coin.
Yeah.
And you're talking about, I think, a market cap north of $18 billion.
Yeah.
I was really floored. I feel like such a Luddite because I'm so behind on what's happening. A company that commands that kind of market power is something we definitely need to understand. I mean, it's changing the face of currency.
100%. And as you're talking, right, this isn't something we have prepared, but we're just kind of Googling who are the largest stablecoin issuers. So you can see here, right, Tether, as of April 2026, has $180 billion worth of supply, right? So Circle is the second largest issuer. Let's see how big they are, right? Or here, let's look at this chart. I mean, these are saying fiat-backed stablecoins, so fiat currency-backed stablecoins, like we're saying, which are backed by real-world markets.
But this feels like a total financial revolution. This is the next era of a creation of new currencies.
Yeah, I mean, this is, I think what was happening with like Bitcoin and Ethereum, they're kind of their own currencies, right? They're backed by essentially the work and the users and the trust that folks have in those currencies. Stable coins are backed by actual dollars, right? Not all stable coins, but the dollar-based stable coins are backed by actual dollars. So you can see here, it says like issuers of fiat-backed stable coins have a reserve funding of real-world assets. So an issuer might hold $100 million to support 100 million stable coins. And that peg is supported. So of course the dollar can go up and down, but just like that, this USDC or USDT would go up and down. But like we were talking about, the market is massive. Let's see USDC market cap. So this is the second largest issuer, right? So the market capitalization of the company, so just the issuer is almost $80 billion.
Wow.
And it has this 1-to-1 USD peg.
Wow.
So
that's incredible.
just as like an interesting thing, right? Because we don't realize the scale of some of this stuff.
Okay. And as opposed to like, if I'm trying to sell my Bitcoin, I would sell it on exchange, but then there has to be a buyer of that. Is that right? At that price?
Yes, exactly. Right. Like it's based on what the market is for Bitcoin. It's not being backed by real world assets in the same way.
Right. Yeah. This is interesting. It's fascinating. Yeah.
So one thing, DV, that we were talking about kind of offline was how frictionless these coins are in terms of, for example, if you have to make an international payment, currently you might have to wait 3 to 5 days. It could take more than a week sometimes to see the funds actually in your account.
Yeah.
There are SWIFT codes. There's all kind of friction. And so is the valuation that we're seeing, are these massive valuations because there's speculation that these coins are going to fundamentally change finance and make it frictionless? Is the value related to the kind of railroads you mentioned, that there are blockchain railroads that are being built as kind of financial infrastructure? Like what accounts for massive valuations?
I think it's usage, right? Like you're not getting market caps like these if they don't have users actually using this stuff day in and day out. What we were chatting about, I think at some point, was we were trying to make an investment in the UK in a European company. And it almost took us like 3 weeks to get the funds where they needed to be. And it's because you're sending it, this bank is talking to that bank, they're making sure there's this other bank involved. And the whole process just took forever. Whereas if you're using USDC, you send me your wallet address. To get the wallet and things like that, there is a KYC process generally, because that is part of the larger issue, I think, some folks have with crypto. At this point, you have those KYC regulations to get the wallet. And so once you're KYC'd and you have the wallet, it's me taking your wallet address. I'll make a test transaction. Let's say I want to send $10 million. I test it first by saying, hey, I sent you $1. Did you get it? You confirm you got the dollar or the amount, and then I send the rest of the money, and it's kind of over blockchain rails. And it's a much quicker, frankly, and easier process that way than we felt like sending a wire and having to deal with all these various issues. I think the reason you're seeing market caps like this is, frankly, it is the way of the future. I think it is the way that folks will finance things in the future.
I watched this documentary by Neil Ferguson called The Ascent of Money, where he talks about how the original paper notes were IOUs so that merchants in different cities could exchange goods. And they were able to, the banks were actually benches of merchants who had relationships where they would honor a certain IOU. And also that the original bonds were war bonds. So like Florence, when they needed to go to war and they needed to raise money, they were issuing bonds to the public. And then that set the floor on interest rates, because that's you have to beat that for it to be worth it, because the government is willing to pay you that amount if you are willing to loan your money to it. That the bond market kind of set the floor there. And that financial innovation of like Florence and other Italian city-states, that set the tone for currency even to today. So is this kind of the next revolution? We'll one day talk about paper notes as a thing of the past, but this is all happening. This is going to start happening through wallets. And will governments start issuing tokens? Where do we go from here? What does the future hold for crypto?
Again, like my personal take is that currency is too powerful of a lever for like governments to let go of, right? I don't think that, and I think that's why there's been some of this, let's say, regulatory hostility towards some of these like currencies popping up, because currency regulation is a massive function of the government, right? And we entrust them to do that. So there are these things called like gov coins, which are like government issued, again, like digital dollars that are backed by like, it doesn't exist in the US, but like that would be backed by like the treasury. I mean, I could see that being a thing. I could see stable coins where the US continues to issue fiat currency, and then you have these other issuers that convert them into these digital dollars. I can see those definitely being, I mean, we're already seeing it. Look at the market caps, like more and more relied upon as forms of value transfer.
And okay, I mean, there's another major transformation happening right now with AI. How is AI affecting cryptocurrency and the market?
So it's an interesting thought. Like, I think that like when folks are allocating investment dollars, emerging technologies is like a bucket for them, right? And AI, and rightfully so, has the attention, and it's the new hot thing now. So a lot of the dollars that I think emerging technology is taking they're going to AI. So crypto's taken a little bit of a backseat, I think, in terms of like where a lot of the investment dollars are flowing. For us, though, I think that's a good thing, right? Because I think what it's done is it's kind of shed this FOMO and like crazy valuations of a few years ago. I think that the industry itself is kind of maturing, right? A few years ago, I think valuations were off the chain. I think people were asking for really off-market terms. But now you're seeing a much more thoughtful approach, especially to taking in institutional capital that founders have. It's one of those things where you see that the industry has come a long way. AI is having its moment, right? The valuations are crazy. And it's frankly, people are throwing money at anything that has like a .ai or kind of an AI nexus. So we'll see what happens there. I think it's an amazing technology, and it's something I use almost on a daily basis.
As part of, I was hoping you could describe, without getting into anything confidential, I was hoping you could describe your work at CoinFund and what your day-to-day looks like, and what kind of deals in broad strokes you're looking at, and how the regulatory landscape affects how you think about risk and investments, as well as technological landscape. I mean, we're talking about AI and other technologies and media. For example, we're seeing this merging of worlds, like OpenAI buying a live YouTube show, Twitter stream show called TBPN. And you're seeing this merging of AI, media. How does that play a role when you're looking at these deals? Are you seeing the ground shift beneath your feet, or what is your kind of basic philosophy when you're looking at deals?
Yeah, I think of myself here at CoinFund as like the deal execution department. So we have an investment team that goes out and sources deals, and like they're experts in the industry. They are the ones that kind of figure out what direction we want to make investments in. And then they'll come back and tell me about it. And they'll say like, hey, we want to think through investing X amount of dollars at X valuation. And I say, that's great. But let's think about all the other things that we can ask for or that we should be thinking through. Like, do we want a board seat? Do we want information rights? Do we want pro rata rights? Do we want a token warrant? Are there any kind of or brother companies, right? Or tokens that like the company's intellectual property will be used for? So we kind of sit down and have this big conversation, right? And then through that, I end up like crafting a term sheet, right? And saying, all right, this is high level an investment we want to make. And here are kind of the terms that we want to make the investment on. And so that term sheet goes over and we spend a little bit of time talking about it with the founders. And this is where like some of that translation work comes in, because we were talking about how part of the most interesting thing in crypto, it's like that translation work between, founders who have built this like very genuinely new thing and investors who need that framework of returns, and then this legal system that's still trying to catch up, right? So a lot of my day-to-day is that, right? And then once we have a term sheet that's signed, it's shepherding that into actual investment documents and kind of closing the investment and the deal. So I take it from that term sheet stage all the way through like our dollars going in, which can be a lot more complicated than it sounds sometimes. On the flip side, I also help with kind of our portfolio company day-to-day management. We have over, I think, 100 forecos at this point, and people have legal questions. They just want like a common sense take on things. They want introductions. So I do a lot of that. When we're thinking about like next steps with a lot of the portfolio companies, we'll have those conversations with the investing team. All of that stuff kind of comes into my lap.
Did you have to pull some concepts from traditional finance and invent new ideas with your work with crypto? I mean, for a lot of this, there probably aren't precedents.
Absolutely. And that's what I kind of loved about it, right? But as you guys, I'm sure know, like we really have the ability to be creative. And I think as a deal attorney, that is where our power lies, right? Because the more creative you are, the more you can have both sides achieve the goals that they need to achieve. So like these very customized solutions. And that's one thing I like about crypto. I'm not going to say I'm the first person to think about some of these things, but they are very novel concepts. For example, when we're thinking about tokens, if I'm talking to my team members and we're like, where's the revenue going to flow? A lot of times with startups, we don't know. Is it going to be a token company? Is it going to be an equity company? And so we'll draft these agreements. We're like, okay, they have a C Corp right now, right? So we'll invest in the C Corp. We'll get traditional equity protections. And then we'll have this document called a token warrant, right? Which says that if you ever launch a token, we get the same percentage in that token supply as we do the equity supply. And then there's like these negotiations over, okay, but like, should you get the percentage that you own of the company, at the time of the investment or at the time we launched the token? Because maybe you sold down,
a warrant, right?
Right? So maybe you sold down, maybe there's been other investors that came in. So your 10% is now worth 8%. And then these are conversations we have with the company. Now, the other interesting thing is tokens typically, once they're launched, you can't be diluted because there's unlike shares, there's a finite token supply generally, right? So you can't expand and contract the supply. So there's, so when you have 10% of the token supply, that means I have 10%, usually forever, right? Like there are certain cases where you can inflate things. And so then there's this debate, right? Of, okay, but like equity, you're going to keep getting diluted. And like, now let's say the values in the tokens, but tokens, you're never going to get diluted. So should you have to put in more money, when we launch the token? Like these are the types of conversations and negotiations like we're having. Like should it be a dilutable or non-dilutable token warrant, for example?
So, I'm fascinated about the future. I don't know if you guys chatted too much about like what the next maybe 5, 10, 15 years looks like, but like in crypto, where do you see the most opportunity for, I know we talked a little about real estate. Where else do you see the disruption happening? And, maybe what are some insights for people maybe to look out for, as also we kind of see this marriage of like AI and crypto, and how are those going to work together?
Yeah. It's really interesting. Like the AI crypto stuff. I mean, the things that are being developed at this point in time. Like I think there's this famous quote of like, there's known knowns, there's known unknowns, and then there's unknown unknowns, right?
Right.
And that's the coolest thing I think about like all of these technologies is like you can provide the framework and then people are just creating, right?
Yeah.
Um, a lot of the like crypto X AI stuff we're seeing right now are like people are creating these AI agents, right, to go do things for them, like calendar calls to do some of their work and things like that. So you're also at some point going to be giving these agents access to some of your finances, right? I even think about like we were talking about, or in the beginning, we have a small winery, right? I can imagine there being a world in which instead of selling bottles of wine, you're selling wine NFTs, like pictures of wine bottles. And I know that I own the wine because I have a verified ownership on the blockchain. And I know that the wine came from the winery and there's wine fraud out there, right? Again, just as an example, I can trace the ownership back to the winery on the blockchain. And now, like you have collectors who buy and sell big portfolios of wine. Rather than actually selling physical bottles, they're selling NFTs, which are redeemable from the winery itself for the bottle whenever you want to drink it. So now you have verified ownership. You have wine being stored correctly by the winery itself. And then the other part of that is you have the winery that gets to profit along the way. Traditionally, you sell a bottle of wine, you don't know how it's going to taste in 10 years from now. And now suddenly you have the same bottle of wine you sold for $100 is selling for $10,000. But because these transfers are happening on the blockchain, you can have a smart contract that says, hey, every time there's a transfer, like 2% goes back to the winery, right? So the winery also profits.
Like a royalty.
Like the royalty, like as it goes up. And by the way, the same thing exists for like digital art.
Yeah.
And this was one of the big benefits of why you should use digital art or NFTs or smart contracts versus the traditional methods.
Wow. Just imagine you could, if you invent something or you've created some kind of art, I mean, you're talking about that's generational wealth where through the blockchain, you could have a royalty that just automatically gets passed down into a wallet.
But I mean, look, these things don't change hands a lot. I don't know. I mean, sometimes they do, sometimes they don't. But at the end of the day, like it would be great if the original artist or the original winemaker, whoever they are, like could, profit off of their creation becoming bigger and bigger in the future.
Yeah.
I also love that you said I have a small winery. You can just say winery. That's like when people say I went to school in Boston. Okay, we know it's Harvard. But speaking of which, let's give a shout out to your winery. Let's hear a little bit about that brand and that concept. Yeah.
And where can we buy the NFT? Where can we buy the NFT for your winery? Yes.
we're big wine fans. I mean, DB, I think you know that about me. I love sitting down and drinking some Vahali vines.
Next podcast, we got to do some tasting notes on podcasts.
That's it. We should do the next one as a tasting.
Yes.
Yeah, I mean, look, it was one of those things, total like serendipity. We started going to Paso Robles, which is halfway between here and SF, because my older sister had kids and my parents were going up to see them a lot. So they'd stop there and they loved the area. They loved the wine that comes out of there. And so, they ended up purchasing some land and starting Vahali Vineyards, right? Which is my last name. The first batch that we planted, we kind of were thinking through what varietal we wanted to plant. And my mom was like, look, in Indian cooking, you always have this concept of the tadka, right? Which is like that onion, garlic type of base. And she said, look, petit syrah is the base of a lot of great wines that I like because it gives this like complexity and heft. She's like, why don't we plant petit syrah? So it's like the tadka of any good wine blend. And so we planted all petit syrah, which has done great for us. And the goal was just to kind of sell it, right? And it would essentially pay for itself and we'd have this beautiful home and vineyard up in Paso. And I think 2020 or 2021 came around and there's a big glut of grapes in the market. And we decided that we would actually produce some of and we had a second vineyard by then. We'd actually produce some of the wines and the wine got great results. I think we got like 93 points on Wine Enthusiast for our Petit Syrah. We started producing a Cab and a Grenache and now we even have a rosé, a Grenache rosé called Gulabo. And so we've and then we leaned into the South Asian heritage. So my mom paints all the labels and we have about 7 or 8 different varietals. And we have a lot of fun with it. It's definitely like a family thing. And, we sit together during Thanksgiving and we have like the straight up varietals, and we kind of blend and do a blind tasting and choose which one's our favorite. And then kind of produce that the next year. And so,
Amazing.
yeah, it's been
DV,
fun.
next
Amazing.
time we need to do this over some Vahali Vineyards.
We're going to do that.
100%.
I think we
Yes.
could do an
Yes.
episode on each of the things that you do. But I think for today, we're going to let our audience digest all of this information about crypto. I know I feel like I learned a little bit more. I'm a little bit more knowledgeable about this industry. I mean, it's something very important. It's affecting all of our lives. I mean, you have multi-billion-dollar market caps now for publicly traded companies that are issuing these coins. So it's critical to understand, we can't run from change. We need to understand it. And I know that's what this conversation has done for me. I feel ready to explore this topic and subject in much more detail now. So thank you so much for joining us. Do you have any kind of comments or thoughts, anything that you feel like we missed about this industry, or anything that you want our audience to know about crypto as they kind of venture off and learn more about the industry?
Yeah. The only thing I'd say is, look, I think we scratched the surface on some of the bigger things today. I think people are often intimidated by it. And I think the industry needs to do a much better job of being user friendly. And I think we're getting there. And it's absolutely not an overwhelming thing. It's one of those where you start with, making a small investment in coins or looking at some NFTs. And I definitely believe that given the volatility, even over the last decade, you can see that the industry's here to stay. So it's not going anywhere.
Yeah. That sounds fantastic. And I really want to thank you again for sharing all your insight. You have a wealth of insight on the legal side and as well as on the operational side when looking at this kind of new and emerging industry. Whether people believe, like it or not, this is going to be the future of trade just because we're going to be working in a digital world more and more. And I think people need to be ready for that and learn about it and educate themselves. And Dilveer, I want to thank you again for providing some of that education and really providing great insights on this new and emerging industry.
For everyone out there listening in our carbon community, thank you so much for joining us again on another episode of Letters of Intent. We look forward to seeing you next week. Stay tuned and keep on making your deals.